Good afternoon, traders. Welcome to the new video. This is kind of, we could say that this is a summary of the day. Just a quick review of what I marked today, what I was looking for. And unfortunately, the setup I was focused on was the break-even setup. It's also sometimes happening, of course. Any strategy will be working every time. There are sometimes losses, sometimes break-even trades. We cannot predict the next move from big guys. We can only expect some intention, what they want to do, but there are still in the market the opposite side. What these another guys want to do also their intention. We can never ever predict this. Okay, today I shared very simple setup with just two zones of interest, or maybe the third one is the OHLC gap. I will also mention this. First of all, here was my supply. I used now the volume alerts, as you can see here. So it's not just a simple volume, but the volume with alerts set to 1000. So if in one M5 candle there were more or at least 1000 executed orders, this will be marked in different color. And I found that such zones from such candles are very accurate and usually are holding the price. This is for me true supply and demand areas. So take a look on this one. The first one candle, it is the news candle from appeared on the first 15 minutes after 15 minutes of New York session. So the case of marking the candles with over 1000 volume shouldn't be like I'm marking all this area, yes, because this one candle, the next news candle, is also over 1000. What I mean here is finding kind of simple logic, to not overcomplicate things, of course. I'm just marking the beginning, where the move started. I'm not interested at the end of the move, only the beginning, where the sellers decided that they want to break support, demand zones, etc. So where the intention happened. So here we had the equal lows, there was support, and the price didn't reject, so that wasn't any liquidity grab from passive buyers, but they were very aggressive sellers. They broke all the demand areas on the way. So here is my supply. Same with demand zone. I found here bigger volume, over 1000, and it started 1705. It could be also maybe just the last candle, where the buyers appeared. I just wanted to see bigger zone. It's really by marking the zones, you need to have also the feeling. Like I am usually saying that trading is an art. I'm always making mistakes, of course. It's not 100% accurate zones. Just by my logic, here was a huge rejection week, but price broke this week here with even imbalance. So here for me joining the next sellers. So the pressure was so big that they even left an imbalance, and the big one, 62 on the bid side. So I thought that here could be a good higher edge of demand zone. So the passive buyers were waiting, and they just sold to fill their orders. So there were my two zones of interest, and also on the footprint chart I marked two OHLC gaps. The first one is 730, and you can see the OHLC gap is when the two candles touching each other only by a corner. All other candles are filled different way, but I love to see the corner. For me, this is very important kind of zone. And the second lower one I had from 240 also. Take a look at these passive buyers and then aggressive buyers. Beautiful area to watch the price. So I had two zones of interest. The lower one was inside the demand. I think that the lower one was somewhere here. Okay. And the higher zone was here. Oh. So there are two OHLC gaps and main supply and demand for today. Just for London session, I'm not that often trading later. Okay, so where the London started, there was the bearish candle. So about the structure, if we see the bearish market and it stopped, so potentially the buyers absorbed the sellers' pressure. Yes, so from intermediate part of the course, this phase of the market is called accumulation. It was a ranging market and then started to go up. And again, range. The whole beginning of the Frankfurt was in a range. So after the first rally, here was the reaccumulation phase. So it was the pattern also, guys, from the intermediate part of the course, which is called rally base rally, I mean, yeah. Here we had the demand price rallied, made another range, so there was very high probability that the price will go up, and that was my view. Also based on the H4, here I have the weekly market profile with weekly POCs. My area of interest was here, between these 2 weeks. This is the typical ICT fair value gap. We could mark this like that. Here is on the market profile, we see very high volume in this area, and also weekly POC is here. Yeah, so it's 2467 level. Then let's check on the M15. We have here the volume spike when the news started. Yeah, so very big orders came to break this low. And 2465. Yeah, so these two levels matched to each other. So that was for me the area of interest. Yeah, like here with the volume spike. So I thought that if we are here right above the OHLC gap, that we could be bullish with very high probability. And it also matched with my supply based on the M5. Yeah, here is the volume spike from M15, and all these little puzzles were for me very obvious. Yeah, so that could be a high probability good bias to look for. So I didn't want to sell. I was only focused on looking for buy position. So again, bearish market stopped, so sellers got absorbed. We could call this accumulation phase, yeah, accumulation of orders, get out of the zone and waiting for more orders to come. This is how I see the logic, and that's why I wanted to buy. Let's see on the footprint where the London started. Yeah, so it was pretty long waiting and jumping from the OHLC gap, and then was the bearish move. Take a look. Take a look on the delta here and the volume. Huge volume came and very highly negative delta, especially at the second part of the candle. So in that moment, it could mean two things. Yeah, that aggressive sellers want to get out and come back to the demand lower, or that these are passive buyers which already got filled their orders. So we shouldn't jump directly to the trade when we see this, because such a delta could have two meanings. Older me, a couple of months ago, I loved to enter directly when I think that this is absorption. But now it's better to wait for a confirmation. I'm still changing. I prefer to be more picky, more conservative, trading bigger accounts. So I love to get high win rate. It's because it's better for my mind. So I'm waiting for confirmation. So let's check where these orders happened. It was the VWAP. Yeah, the VWAP, which is volume weighted average price. Average price. Yeah, so important level. I know that on the course, on the advanced section, I said that I still feel very uncomfortable with VWAP. I missed that lesson even. But later on the library channel on Discord, you can see the videos that I again started using this, even on the recent summary of the day videos. Because here can happen a lot. Yeah, so if I see a highly negative delta on the VWAP, I'm thinking more about rejection than continuation of the move. But it's of course always matter of time to get confirmation. No entering trade directly or with limit orders. I don't use this, especially limit orders, because it is, in my opinion, you may not agree with this of course, in my opinion, setting limit orders is guessing. We cannot predict which order will be triggered in some price level. So always watch. I prefer only market execution. Okay, so the OHLC gap seems like being broken, but we had here equal lows. Yeah, it was the support as well. So what shows the footprint chart? Big massive orders, stopped. Yeah, so by logic with such a huge clusters, if these were really aggressive sellers, the price should go down, but it stopped. And so what I'm looking for to call something absorption is to see really huge delta, and shift on delta also better if it's really big difference between two candles. But jumping again here 5 minutes after potential absorption, it could be still too quickly because there is no break of structure. Next candle also looking nice. Positive delta, really big clusters, which I could say that they are highly positive, but still didn't break the structure. Yes, as I shared the print screen on the Discord. For me, it became easier to see the break of structures on the footprint chart, because by brokers the wicks can be different, the size of the candles could be different, even especially when there are the B-book brokers which can manipulate easier. Such a situation after my forex funds made me even more picky about reading the wicks by different brokers. So I love to watch that on the footprint chart. So I could say that the 1035 candle is breaking these highs, yes, these tops of the candles, and again with more aggressive buyers. Take a look how here the delta look like. It's huge shift on delta from minus 285. There were some aggressive buyers, and then boom, break of structure with even more buyers. So the entry could be after closure of this candle. Of course, there was a risk of 112 level, because here could be the passive sellers, right? So it was very close to this, but it's in your hands if you want to put the risk or not. Yeah, some traders love to see complete change of character or break of structure, and no matter how it's called. it could hold the price. Yeah, but for me, it is what I'm looking for, the combination of passive buyers and shift on delta to aggressive buyers. I love to see both of them because in my opinion, for me it's logical that everyone at this moment are already in the game. Yeah, the passive buyers got, the orders got triggered, the amazing professional aggressive buyers found that intention and they also jumped into the game. So everyone, the biggest buyers, the smaller buyers, everyone are on the game. So why not to join them? So the entry could be 10.35. Let's see where it was. Like here. I will just, come on, yeah. 10.35 with a stop loss, yeah, somewhere at the end of where the potential passive buyers, of course, happened, yeah. Because it's no reason to hold the trade if that one candle will be broken. Yeah, because it should mean that there are no more buyers in the market. Yeah, the stop loss looks like big, but it could be very nice 2-hour trade. Yeah, 12 pips stop loss to the 24 or 5 pips. Of course, the TP could be at the volume spike, but from my experience, I like to aim just to the lower edge of some zone or higher edge if we are talking about demand, and just 1 or 2 pips difference lower. Yeah, because it's happening. It happened plenty of times in my trading that price was going to the zone, and for example, a few pips below it. It was changing the direction just to leave the liquidity for the news, for example, for the incoming news same day. So do not be too greedy and try to aim for a bit less. Yeah, I know that I was a trader aiming always for 1 to 5, 1 to 7. The market changed last year when the war started in Ukraine. The candles changed their structure and also change the size of the candles. They are now bigger. It is very hard to find a setup with less than at least 5 pips stop loss. I usually see setups for 7, 8, maybe 10 pips, but bigger candles, bigger stop loss means that the move can also be bigger. So still same potential of the move. Yeah, if I was looking for 5 pips stop loss, the 10 pips should be really easy to catch if you understand the market. But it was a break-even setup because the price got some interest on the lower volume spike. The lower volume spike was here. Yeah, you can see the volume is making kind of imbalance. Yeah, there's high volume, lower volume, and again high. And here is volume spike which I missed on my markups. Yes, I'm not marking every single high volume level. I prefer to see the biggest ones. And unfortunately, price reversed. So again, when here was the reaccumulation, it was the very high probability that the next range could be a distribution. Yes? It's all in the course. 3 market phases. So I was really looking what can happen. So if price calms down and is in the range, it is better to move the stop loss below this range. Yeah, because if the move up happened and price came back down, that was the really high chance that this is just a liquidity grab to the volume spike and the price will fall. So it was no reason to hold the trade. Better to always have the stop loss in a safe position, to not lose money. Yeah, there's no belief. The structure matters a lot. So if price were coming back down, there was a very big chance that it was distribution. Price just didn't want to go up. How it looked like on the footprint? For me, obviously, it wasn't clean. That's why I said that holding the trade with just move stop loss was a good idea, because okay, let's read this. After the range, it was the shot up, could be read as a last push up after compression, but there wasn't big shift on delta. It was one time negative, positive, negative, positive, negative, positive. So hard to read and understand if anywhere here are aggressive sellers right after this potential filling of the passive sellers, passive sell orders. Even if we could mark here the trend line, yes, as a break of structure, I didn't feel that here are aggressive sellers with after shift on delta. And yeah, then it happened with huge imbalance of 58 on the bid side. Here came the aggressive sellers, which should took you out with profits, maybe break even, maybe profits. Yeah, because when imbalance happening with break of structure, this is bad sign to hold the trade. With such a huge imbalance, yeah, 58 is a lot of money in the game. Let's calculate this. 58. One GU contract costs £62,500, so it was over £3.5 million sell pressure to break this support. And then yeah, it was matter of time to see the price maybe on the second OHLC gap, but it was very close to the news. Let's see if here was absorption, any sign of absorption or not. That could be read with such a delta as a potential passive buyers, yeah, that they fill the orders. Unfortunately, it was below my demand, so I could be confused if this is good or not. I do not like such a deep invaders, as I'm calling this. Maybe some liquidity really could be here, but I don't like so taking trades from the lower edge of demand. But let's say that these are potential buyers. Then what we need to see is a break of structure. Just what I don't like is how the orders occurred here. Yeah, it could be liquidity grab, but with liquidity grab pattern, we need to see complete break of structure, so break of this supply, and it didn't happen. So it's really need a lot of practice to find a difference if something is liquidity grab or something is just filling the orders, and which type of break of structure we should be looking for, the horizontal or that. I forgot the word, sorry. This was for me too deep in the demand. But yeah, it was my second OHLC gap, and I would like to see the reaction from there exactly, but not after such a deep move to the end of the zone. Yeah, because my OHLC gap was here in the middle of the zone. Yeah, very unclean price action today. But as you see, I love the simplicity of the zones. So very clean chart with view up and the imbalances. And also be careful about the imbalances, because I found this that sometimes they are in the different place in the candle and in different place in the footprint chart. That's why always when I see some imbalance, I'm marking a horizontal line on the footprint, not in the candlestick chart, but in the footprint. It's safer. And what next? Someone asked me how I'm marking my zones. You can see that I have plenty of them. For example, here's some supply from the beginning of September. Here's something from the 22nd of August. How I'm doing this, I use the parallel channel. Yeah, it's for me then easier to mark a zone. This is just an example, of course, and this is extended line. Yeah, so previously I was using just boxes, but I like to hold the zones for longer time, and these are moving with chart, so that's very useful for me. Okay guys, so it was really quick video, already 25 minutes. So again, please remember to focus on the delta. It should be really highly negative when you are looking for buys, and then shift on delta with a break of structure. And then read the footprint chart to not believe on reversals in your direction. Every move has some intention, so let's leave the hopes and beliefs. Yes, we need to read the market. So that was for me break even setup, later invalid because price broke easily the OHLC gap and was very deep in the demand zone. Yeah, and the third important thing, of course, it was very close to the news. Yeah, it was how long? Half hour before the news, the price action here. I wouldn't be taking a trade just before the news because of spikes and the big danger of the manipulations. Okay guys, thank you for being active on the chat room, for asking questions there, because the others can also learn. And the most important thing is that I know that you are working and really that you have big willingness to learn that skill. Thank you guys for watching and have a nice weekend. Bye bye.